Joining us today is John Ciampaglia. He is the CEO of Sprott Asset Management, and we'll be discussing the uranium market in great detail. Sprott is launching a new uranium trust fund, and it's a very exciting time for investors. Welcome to the show, John.
Yeah, thanks for having me.
As I said, very exciting time for investors in the uranium market, especially those who have bought uranium stocks. I'm looking at the URNM, which is the North Shore Global Uranium Mining ETF. It's appreciated 100% since last year. Now, the uranium metal itself has not appreciated 100%, as you know. So why the divergence? Let's start with that.
Sure. Well, I think the uranium stocks have clearly are building in a future price expectation for uranium that's much higher than current spot prices. And we've seen the price of uranium move from recent lows a few weeks back. And actually just yesterday, we kind of pierced the $38 a pound mark, which is the highest level uranium's been at in about 6 years. So that level, I think, has got the market very excited. They finally feel that the corner has been turned in terms of coming out of this very long, protracted bear market that uranium's been in.
It's interesting how the uranium market could, I wouldn't say front run, but basically, like you said, forward project the price of uranium.
Mm-hmm.
We've seen some of that happen in, let's say, the gold and silver markets, where sometimes the gold miners move ahead of the metals, but not to the extent where it rallies 100% and the metal stays relatively flat. I wonder what you think about the valuations of these miners today for uranium. Now, some people might say that because the underlying metal hasn't really moved, these stocks are overvalued, especially when you consider that many of these companies like Cameco haven't really even been mining over the last year. What do you think?
Yeah, so I think the stocks are reflecting a situation right now that where the market is in a deficit position. And what I mean by that is, if you look at the global fleet of nuclear reactors, most estimates will say they need about 175 million pounds of uranium a year to function. That's just because they're using fuel and need to be reloaded. If you look at the current supply along with secondary supply, so primary supply coming out of the ground and secondary supply available, estimates show that to be about 140 million pounds. So there is a deficit, and that's what the market is getting excited about. How long can this deficit stay in place before the price needs to reset? And there are many idle mines right now that are not in production because the price is just too low. Yeah. So many market participants believe we need a new incentive price to bring those big mines back on into production. Some believe it's $50. Some believe it's $60. I don't know what the exact number is, but it's obviously higher than where the spot market is currently trading, which is about $38. So I think that's why the equity investors are excited. They want to see this recalibration in the marketplace where this incentive price helps to rebalance the market.
Why can't the miners just make a forward contract right now with some of the utilities companies and come to an agreement where they're producing at a higher price than spot price? I mean, participants in the uranium market very rarely use just a spot price. I mean, most of it is through contracts anyway.
Right. I mean, the primary users of uranium obviously are the utilities, and they tend to contract in the term market. I think the issue is that these mines are closed. It's idle production that won't come back online unless that price is there to contract for those future deliveries. So the market is grinding its way to that level, we believe. How long it will take is to be determined. But right now, I think the market is excited about the future for uranium after a very long, protracted bear market, as I said.
So, John, where are the utility companies getting their fuel from right now if North American miners are not producing anything?
Yeah, so a lot of utilities are still receiving material from contracts that they entered into years ago. And that's what's supplying them. So that there are a number of mines producing about 140 million pounds a year. So that's still supply that's coming to the marketplace. The issue is going to be when the contracting cycle resumes. And many participants believe that over the next 1 to 2 years, we will enter a new cycle of utility contracting. And that cycle will help reset the price of uranium to higher levels.
Okay. And you said that the uranium stocks are basically projecting higher uranium prices. You said that these prices could be $50 to $60. Now, again, the uranium stocks have already run up substantially. Do you think that the underlying value of these stocks have already priced in $50 or $60 for uranium?
Yeah, I think some of them. I think some of them are clearly reflecting pretty lofty prices of uranium, and also the expectation that some of these development projects are actually going to get built out in the years to come. So, yes, I mean the stocks, have clearly gotten a little bit ahead of themselves. My partner Rick Rule will tell you that they are reflecting lofty expectations right now. But again, it's a small market, and as we've seen with other sectors, when you get a spike in interest from investors, these valuations can sometimes get a little stretched.
I'm just wondering if I put myself in the shoes of a uranium investor who was looking at the market way back last year, last September, or even, I mean, it started rallying in November. Mm-hmm. And I'm thinking to myself, okay, the uranium price hasn't moved much. And for all these factors that we've discussed, companies aren't even producing. What are the variables I'm looking for to make a decision as to whether or not to buy? I mean, you must have had tremendous foresight. Anybody in the market must have had tremendous foresight to realize that these contracts at current prices are not sustainable. They have to roll over, and eventually prices will have to be reflected upwards, right? So put yourself in the shoes of an investor a year ago. What would you be looking at?
Yeah, well, I think really what's driving the market are a number of things. I think the biggest thing is the narrative around the role of nuclear in decarbonization. So I think why the market participants are so excited, why people are buying up these stocks at these levels, is that the narrative around uranium has really shifted. If you think about the views of many people around uranium and nuclear energy, there's this kind of negative stigma related to large scale disasters in the past. The reality is that nuclear energy is one of the safest forms of energy production. It's one of the most reliable, and it's one of the cheapest. So in a world where governments around the world are moving to decarbonize the economies, there's growing realization that nuclear has to be part of the low carbon energy mix. And you're seeing that from the Biden administration. You're seeing that from the European Union. You just can't keep the lights on with just solar and wind, because they're just intermittent, as we know. Nuclear provides the most predictable baseload of energy in a world that's becoming increasingly electrified.
As we're speaking, actually, the price of uranium is shooting up from about $25 to $37. I'm looking at the spot price over the last week. So there's a big move, but it seems to just move and then stay and then kind of drop. If you zoom out a bit, we're still nowhere near its highs of around $100 and $140 a pound way back in 2007. What happened in 2007? Can you shed some light as to why it reached triple digits, albeit for a very short amount of time before it came back down?
Sure. Well, back then there was obviously huge excitement about the build out in places like China with their nuclear fleets, and the market clearly did not have the pounds to meet that future growth. Now, eventually, new mines came on board and brought relief to that. But I think if you go back a little earlier in time, say the last 10 years, the price of uranium, even at today's level, is still about 50% lower than where it was in 2011. And I think a lot of value-oriented investors are looking at that and saying, where else in the world can we find a commodity that's still 50% where it was 10 years ago? Given the valuations we're seeing in just about every asset class in the world, this is one that still represents value to many investors. And I think that's what the early investors in uranium in the last 2 to 3 years identified accurately. Right. And they remain very bullish, even though the price has kind of gone from, say, $20 a pound to approaching $38 a pound.
So, John, you are correct. The decline in the uranium price over the last 10 years has been partly due to the public being disenchanted with uranium power and nuclear energy after the Fukushima accident in Japan. What needs to happen now to turn public perception around? Is it more public awareness of nuclear power, that it could be a safe and reliable base load for power Is it more government subsidies and sponsorship? Is it more investor interest from the generalist investor space? What needs to happen, John?
Yeah, I think it's a number of things, and we see them happening right now. I think there is a growing acknowledgement by the governments around the world, that they will not be able to meet their decarbonization goals without nuclear in the mix. So yes, wind and solar will continue to receive support and subsidization, but nuclear has to be part of that energy mix. So every government is acknowledging that, and I think that's very supportive. The recent Biden administration has announced a number of support mechanisms for their nuclear energy in the United States, which we hope will protract the operating licenses for a number of plants and give them a better ability to compete with other forms of energy. I think education is a key part of the mix. People need to understand that relative to other forms of power generation, nuclear is actually very safe. I don't want to belittle the catastrophes that we had in the past, but nuclear energy the safety track record of nuclear energy has improved dramatically since those events. And if you compare it to the production of things like coal, oil and gas, and other things that we use for power generation, nuclear is incredibly safe, and we actually believe it's one of the safest. So I think there's growing understanding of that, and that's what's giving the narrative a really big shift. And it's also drawing the investment community into the sector. And we also think that's a key driver for price discovery and price formation over time, that investors along with utilities are going to help the market rebalance.
The other issue around nuclear power plants is what to do with the waste. And I was just reading this Bloomberg article. So this is happening in Sweden right now. The parliament is deciding what to do with their nuclear waste. The headline is "Sweden risks blackout as it runs out of space to store nuclear waste." I'm just going to read the first 3 paragraphs here. Sweden has less than a week. This was a week before. Sweden has less than a week to decide where to store its nuclear waste or risk having the lights go out. The Scandinavian country is running out of space to store the waste produced by its 6 reactors, which supply about a third of the nation's power. Without a decision before the end of the month, nuclear operators, including Vattenfall, say they will have to start halting plans in just 3 years. So clearly there's some sort of regulation around storing the waste, and they haven't come to an agreement. This, again, was news from a week ago. So as demand grows, as nuclear power plants, I guess, proliferate, as more utility companies start demanding more fuel, what can we do about this waste problem? Is this something that investors have considered?
Yeah, sure. I mean, it is a key issue. I think the end use for these spent fuel rods, they need to find a safe resting place in the end. At the end of the day, nobody really wants them in their backyard. I think that's part of the issue. So it's really up to the industry to figure out ways to safely store the material, whether that's underground or other means to make sure it's not at any risk to anybody. So it is important to make sure that just like with mining, when you finish developing a mine, there has to be reclamation. So it's similar to that. You need to deal with a complete cycle.
Okay. John, let's talk about Sprott now. Sprott has made some new developments for investors in the uranium space. Let's put it that way. I'll leave it vague and broad, and I'll let you fill in the blanks here.
Sure. So a few months back, late April, we announced that Sprott was acquiring Uranium Participation Corp, which is the first uranium fund that's ever been listed on an exchange way back in 2005. We had a very, shareholder-friendly proposal that we put forward to modernize the vehicle to relaunch it as an investment trust. And that new trust started trading on the Toronto Stock Exchange on July 19th. We're very excited about it, and the market, I think, has really shown their support for the new vehicle. It's trading very well, and it's attracting a lot of interest around the world. What we really wanted to do with UPC was modernize its structure. So we turned it into an investment fund, which is really the kind of go-to fund structure these days for most investors around the world. It trades on the Toronto Stock Exchange. It is growing in its liquidity. We're seeing, as I said, great response from investors around the world. We're providing enhanced disclosure with the fund by providing a daily net asset value. We're disclosing the amount of pounds that we're buying each day. And the market's really applauding all of this disclosure, because one of the things about the uranium market is it's very opaque. It's still very OTC driven. And our involvement is really shining a light on it and bringing more information to the investment community. And we think that's very important if the market is going to evolve and grow, that investors need to have better transparency about how the market operates and what we're doing in the marketplace each day. So we're seeing lots of interest. We're seeing lots of institutional interest. We're seeing individual investor interest. And we're seeing it from around the globe, which really speaks to this idea we just spoke about, which is the narrative around nuclear and uranium has really changed.
Okay, so the name is the Sprott Physical Uranium Trust Fund is the new organized fund. It trades like an ETF, right?
Correct. It trades. It's a closed-end fund on the Toronto Stock Exchange, and it's available in two currencies: Canadian and U.S. dollars.
You said is it backed by physical uranium?
Correct. It's 100% backed by physical uranium. Right now, we have the fund about 98% invested, and we've been raising new capital for about the last 3 weeks. So new capital's been coming into the fund, and we've been buying more pounds. We've probably bought about 3 million pounds in the last 3 weeks. So we've been very active in the marketplace.
Without going into too much detail, where are you buying the pounds from? Because like we discussed, miners aren't producing anymore. Is there
right?
So
there's always an availability of material around. We call that secondary supply. So we've been buying material mostly from traders, some producers, and we've been sourcing that material. The reality is you're right. There isn't a ton of material out there. It is a tight market on the physical side. Mm-hmm. And as I said, the 3 million pounds, it was a lot of work to source and to buy. So it's proving to be a very interesting market to work in relative to the markets we've traditionally worked in, which are mostly in the precious metals.
I spoke to an analyst of uranium, and he said that this fund from Sprott might be a game changer for the uranium market, because he said that, again, like you said, the supply and inventory around is limited. And so what you're effectively doing is you're kind of buying up residual supply, and you're effectively he used the word cornering, but I don't know if you would agree or disagree with that analysis there.
Yeah, I mean, what I would describe it as is we're giving investors that are interested in this category a really great investment vehicle to express their view with, and I think the marketplace. I'm going to quote some people that I've spoken to, and they've just said, you guys have engineered a really great product for us to invest in, and that makes me really happy, because we spent a lot of time and effort thinking about it. We have a lot of experience with these commodity holding funds, and we have 250,000 investors that have given us their money to invest in these kinds of vehicles. So we have great experience. We know what's important to shareholders, trying to manage the vehicle to meet the needs of the marketplace.
And you're at $850 million in assets under management, is what you told me offline?
Yeah, so when we took over the trust, or we started the trust on July 19th, there was about $630 million US dollars of assets in the fund. As of last night, we hit about 850. So that's in about 6 weeks. So just to give you a sense of what kind of interest we're seeing and the price reaction we're seeing in the spot market.
Okay. Well, best of luck with this fund, and we'll follow up more as the uranium market moves, no doubt, down the line. Thank you, John, for coming on the show today.
Yeah, thank you. Appreciate the opportunity.
And thank you for watching Kitco News. I'm David Lin.